Okay, so our topic for today is the value added tax. So as I had said, we are going to discuss the regulations on how to compute the value added tax, how to file for the value added tax, and the requirements on how the business is a VAT registered business. Okay, so our learning objectives here is to discuss the scope of the value added tax. To illustrate the computation for VAT payable or the value added tax payable, and to explain the filing of VAT and the deadline. Okay, so what is the scope of the VAT? By the way, what is a VAT? VAT is a value added tax, okay, that applies to all persons who engage in the business, who sell, barter, exchange, or lease of goods or properties, or render services in the course of trade or business, whose annual gross sales are exceeding 1,919,500, which is under the RA 8424 or the National Internal Revenue Code. Okay? And also for the business who import goods, whether for business or otherwise. But take note, under the trade law or the RA 10963, it was changed. So in order that the business is earning more than 3 million pesos in a year, we talk about annual, so in a year, 3 million pesos, that is subject to VAT. So it means if the business is earning an annual gross, take note, annual gross income or annual gross sales of 3 million and above under the trade law, that is subject to VAT. In the RA 8424, if the annual gross income of the business exceeding on 1,919,500, that is subject to VAT. So it means that the business should be registered as VAT. Okay, because there are business which are non-VAT registration. The business who registered as non-VAT, they are subject to percentage tax, and we are going to discuss in the preceding sessions about the percentage tax. Okay, but there is also a question: how about can the non-VAT registered business can be converted to VAT registered? Yes, because if the business is earning more than 3 million pesos, if a non-VAT registered business is earning 3 million pesos, then it can be converted into VAT. Another question: can the VAT registered business can be converted into non-VAT? It's not, because regardless of the VAT registered business, if their earnings will become below 3 million, that is subject to VAT because they are VAT registered business and they cannot be converted from VAT to non-VAT. Okay? So what are those transactions are deemed sale for the purposes of VAT? So what are the inclusions or what are the incomes that is subject to VAT? Of course, for the transfer, use, or consumption, which is not in the course of the business of goods or sales, originally intended for sale or for use in the course of business. And please take note of this. If the consumption of the products are not in the course of the business, that is not subject to VAT. But if you trade a product that you are going to use for a sale or a resale in the course of the business, that is subject to VAT. Okay? The second one is the distribution or transfer of shareholders or investors as the share in the profits of the VAT registered persons or to creditors in the payment of debt or obligation. So that's also the sale or the share in the profits of the VAT registered person. Of course, that is also subject to VAT. Distribution or transfer of shareholders or investors' share in the profits of the VAT registered person, yes, or creditors in the payment of a debt or obligation. It means distribution, transfer of shareholders or the stocks to a VAT registered person. Of course, that is also subject to a VAT. If you are selling a stocks to stocks and you are a VAT registered person, then the share of stock or whatever earnings that is subject to VAT. And even the retirement from cessation or business with respect to inventories of taxable goods existing such a retirement of cessation. So when you say retirement from or cessation of business, when it comes to the inventories which are obsolete, even you are going to sell in the price floor, and you are a VAT registered business, so it means your income will be also subject to VAT. Okay. So what is the tax base or the rate of the value added tax? Starting February 1 of 2006. Before, from January 31 of 2006 on below previous, the value added tax was originally at 10%. But because of the Republic Act of expanded value added tax, which proposed by Senator Ralph Recto during that time in the Arroyo administration, and it was approved. That's why the value added tax was increased from increase of 2%. So the expanded value added tax will be will become to 12%. Okay, so this is our current value added tax rate. And the tax base of the value added tax is the output VAT and the input VAT. The output VAT, those are the sales. Okay, the gross income from the sales or service. While the input tax, those are the expenses which are allowable deductions to the output tax. Okay, because we are going to discuss what are those input VAT that can be deducted to the output VAT. Okay, and that will be the computation of the value added tax which we compute or we can get. So so as I had said, the taxable base is the gross selling price. Okay, and please take note that there are some transactions which are zero rate, or which is zero rate, zero VAT, it means there will be no tax. Because if you multiply zero from any values, that is zero. Okay? And even on the imports, the base is dutiable value plus the custom duties and excise tax, if any. So the customs duties and even the excise tax are also included to the VAT or to the output VAT. Okay? So what are those transactions subject to 12%? So it's a very long discussion, okay? But I have to, let's see if we can finish it until 10. What are those transactions which is subject to 12%? So we have the sale of goods or properties. These are the goods or properties, including those subject to excise tax, sold, bartered, or exchanged are subject to 12% VAT. Again, all the goods and properties except from those tax exempted, okay, including the products who are subject to excise tax. Okay, that is sold or bartered, that is 12% VAT based on the gross selling price or the gross value in money. The second one, the transactions subject to 12% VAT are the importation of goods. So this is subject to 12% VAT based on the total value used by the Bureau of Customs in determining the tariff and customs duties plus excise tax, if any, and other charges that can be paid prior to the release of the goods from the customs custody. Provided that there were customs duties and are determined on the basis of the quantity or volume of the goods, the value added tax shall be based on the landed cost plus the excise tax. So the tax based on the importation of goods for the computation of the VAT is the landed cost or the gross selling price plus the landed cost plus the excise tax, if there is an excise tax or a landed cost. And the third one, the transactions subject to 12% VAT are the sale of service and use or lease of properties. Okay, The sale or exchange of services is subject to 12% VAT or value added tax based on the gross receipts which is derived by any person engaged in the sale of services or lease of properties, including the following. So what are those sale of services or use or lease of properties subject to 12% VAT? What are those? Construction and service contractors, stock, real estate, commercial, customs and immigration brokers, lessors of property, whether personal or real, persons engaged in warehousing services, lessors or distributors of cinematographic films, person engaged in milling, processing, manufacturing, or repacking of goods for others, proprietors, operators, or keepers of hotels, motels, rest houses, pension houses, inns, resort, theaters, and movie houses. Proprietors or operators of restaurant, refreshment of parlors, cafes, and other eating places, including the clubs and caterers. Dealers in securities. Lending investors. Transportation contractors on their transport of goods or cargos, including persons who transport goods or cargos for hire, and other domestic common carriers by land related to their transport of goods or cargos, and common carriers by air and sea related to their transport passengers, goods, or cargos from one place in the Philippines to another place in the Philippines. Sales of electricity by generation and distribution companies, franchise grantees of electric utilities, telephone and telegraph, radio and television broadcasting, and all other franchise grantees except franchise grantees of radio or television broadcasting whose annual gross receipts of the preceding year do not exceed 10 million pesos. So in the television and radio, if they're not exceeding 10 million, that is subject to non-VAT and percentage tax. And franchise grantees of gas and water utilities. Non-life insurance companies, including surety, fidelity, indemnity, and bonding companies. Similar services regardless of whether or not the performance thereof calls for the exercise of or use of physical and mental faculties, the lease or the use of the right or privilege to use any copyright, patent, design, or model, plan, secret formula of or process, goodwill, trademark, trade brand, or other like property or rights. So we talk about intellectual property rights that is also subject to VAT at 12%. So the lease or the use or the right to use of any industrial, commercial, or scientific equipment. Because that is a form of services subject to 12%. So the supply of scientific, technical, industrial, or commercial complex or information, the supply of any assistance that is ancillary or subsidiary to and furnished as a means of enabling application or enjoyment of any property or right as mentioned in letter R above, or any such knowledge or information as mentioned in the item S above. The supply of services by a non-resident person or his employee in connection with the use of property or rights belonging to the installation or operation of any brand, machinery, or other apparatus purchased from a such non-resident person. The supply of technical advice, assistance, or services rendered in connection with the technical management administration or any scientific, industrial, or commercial undertaking, venture project, or scheme. Next, the list of motion picture, films, tapes, and discs, the list or the use of the right to use of radio, television, satellite transmission, and cable television time, real estate investment trust, and its disposal of real property and from the rental of such property. Tollway operators, recreational clubs, condominium corporations, and homeowners associations. So those are the inclusions for the sale of services, which is subject to 12% VAT. Okay, so what are those 12% VAT. Of course, the sale of the products and services, the importation of the goods, and the sale of services based on the specified inclusions on the 12% VAT on services. So what are those transactions which is subject to 0% or zero VAT? When you say zero VAT, these are the transactions which when you multiply to zero for zero, so there will be a zero VAT. So no value added tax to be paid. Okay, so what are those transactions subject to zero VAT? Of course, the first one is the sale of goods. Okay, the sale of goods from the following: export sales, foreign currency denominated sales, sales to person or entities whose exemption under special laws or international agreements to which the Philippines is a signatory, effective subject sales to zero rate. The second one is the sale of services. So what are the sale of services which is subject to zero rate VAT or zero VAT? Processing, manufacturing, or repacking of goods for the other persons doing business outside the Philippines, which goods are subsequently exported where the services are paid in acceptance of foreign currency and accounted in accordance with the rules and regulation of the BSP or the Bangko Sentral ng Pilipinas, services other than processing, manufacturing, or repacking rendered to a person engaged in business conducted outside the Philippines or to a non-resident person not engaged in the business who is outside the Philippines, when the services are performed, the consideration for which is paid for in acceptable foreign currency and accounted for in accordance with the rules and regulation of the BSP. Services rendered to person or entities whose exemption under special laws or international agreements to which the Philippines is a signatory effectively subjects the supply of such services to zero rate. The services rendered to a person engaged in international shipping or air transport operations, including leases of property for use thereof, provided, however, that the services referred to herein shall not pertain to those made to common carriers by air and sea relative to their transport of passengers, goods, or cargoes from one place in the Philippines to another place in the Philippines. Services performed by subcontractors and contractors in processing, converting, or manufacturing goods for an enterprise whose export sales exceed to 70% of the total annual production, transport of passengers and cargo by domestic air or sea carriers from the Philippines to a foreign country, sale of power or fuel generated through renewable resources of energy, such as but not limited to biomass, solar, wind, hydropower, geothermal, ocean energy, and other emerging sources using technologies such as fuel cells and hydrogen fuels. So it means that all the sale from the services whose in a form of export and selling outside the Philippines, that is a zero rate VAT. Please take note also that there are some transactions and services which are exempted from the VAT. And what are those transactions and services which are exempted? Please take note, when you say exempted, that is non-taxable and not subject to VAT. And what are those? The sale or importation of the following. Okay, the importation of the agricultural and marine food products in their original state, livestock and poultry of a kind generally used as for yielding, producing foods for human consumption and breeding stock and genetic materials, therefore, fertilizers, seeds, seedlings, and fingerlings, the fish, prawn, livestock, and poultry feeds, including ingredients, whether locally produced or imported, used in the manufacture of finished feeds. Okay. Next is the importation of the personal household effects belonging to the residents of the Philippines, returning from abroad, and non-resident citizens coming to resettle in the Philippines, provided that those goods are exempt from the custom duties under the Tariff and Customs Code in the Philippines. So that is exempted from the VAT. And then professional instrument, and implements wearing apparel, domestic animals, and personal household belonging to the persons coming to settle in the Philippines for their own use and not for sale, barter, or exchange, accompanying such person or arriving within 90 days before and after their arrival upon the production of evidence satisfactory to the commissioner that such persons are actually coming to settle in the Philippines and that change of the residence is a bona fide. What the letter B is telling is when a non-resident citizen is going back to the Philippines as a resident citizen to settle for good or to stay here in the Philippines, and all their things like instruments and apparel and domestic animals that can be imported to the Philippines and which are not subject for personal, it is not subject for trade or business, but for the personal consumption of the resident citizen, okay, that is exempted from the VAT. And the fuel goods and supplies by a person engaged in the international shipping or air transport operations. So those are exempted for the importation. And the third one are exempted from the VAT is the services rendered by the person subject to percentage tax under the Title 5 of the National Internal Revenue Code or the percentage tax. Okay, so if the business is a non-VAT registered, that is exempted from the VAT. And agricultural contract growers and milling for the others of palay into rice, corn into grits, and sugar cane into raw sugar or cane sugar. So these are also exempted from the VAT. Okay. Even the medical, dental, hospital, and veterinary services, except those rendered by professionals. And even educational services rendered by the private education institutions duly accredited by the DepEd, CHED, and TESTA. So they are exempted from the VAT. Individuals pursuant to an employer-employee relationship, of course, if the individuals are employed and they receive their a full compensation income, of course, that is not subject to VAT. Okay, for those employees who are in a full employment and receive a pure compensation income rather. Excuse me. And even the regional or area headquarters established in the Philippines by a multinational corporation which can act as a supervisory, communications, and coordinating centers of their affiliates, subsidiaries, or branches in the Asia-Pacific region and do not earn or derive income from the Philippines. And even the banks, non-banks, financial intermediaries performing quasi-banking functions, and other non-bank financial intermediaries. And even the sales, okay, the sales by agricultural cooperatives are duly registered with the Cooperative Development Authority or CDA to their members, as well as the sale of their produce, whether it is original state or proceed form to the non-members. So it means agricultural cooperative who sell their products to their members, that is also exempted to VAT. And even the non-agricultural, non-electric, and non-credit cooperatives duly registered with the CDA, provided that the share capital contribution of each member do not exceed 15,000 pesos and regardless of the aggregate capital and net surplus ratably distributed among the members. And of course, the person who are not a VAT registered on their export sales, that is exempted to VAT. And the transactions which are exempt under the international agreements to which the Philippines is a signatory or under special laws, except those under the Presidential Decree number 529, or shall we say the petroleum exploration concessionaries under the Petroleum Act of 1949. So it talks about Malampaya. Okay, so they are exempted from the VAT. Even the gross receipts from the lending activities by credit or multi-purpose cooperative duly registered with the Cooperative Development Authority, list of a residential unit, with a monthly rental not exceeding 12,800. They are also exempted from the VAT. And the sale of real properties, okay, REM students, the sale of real properties not primarily held for sale to customers or held for lease in the ordinary course of trade or business, or real properties utilized for a low-cost or socialized housing as defined by the RA 7279, otherwise known as the Urban Development and Housing Act of 1992. So if it is the RA 7229, they are VAT exempted, okay? And other related laws whose residential lot valued at 1,919,500 and below, they are non-VAT or exempted, and house and lot and other residential dwellings valued at 3,199,200 and below. So they are VAT exempted. But if they are if the real properties are sold in a commercial or residential which is not utilized for a low-cost or socialized housing, then that is a VAT, subject to VAT, okay, for the REM students, especially for the real properties. And the sale, importation, printing, or publication of books and any newspaper, magazine, review, or bulletin which appears at regular intervals with the fixed prices per subscription and sales, and which it is not devoted principally to the publication of the paid advertisements. And the transport of passengers by international carriers doing business in the Philippines. The sale of importation or lease of passengers or cargo vessels and aircraft, including engine equipment and spare parts thereof for the domestic and international transport operations. The sale of lease of goods or properties or the performance of services other than the transaction mentioned in the preceding paragraph, which the gross annual sales or receipts do not exceed the amount of 1,919,500 under the RA 8424, but under the RA 10963 or the trade law, which is do not exceed to 3 million pesos. Okay, so those are the transactions which are VAT exempted. So if they are exempted from the VAT, therefore they are subject to percentage tax or the tax on corporations or individuals, or the normal tax on individuals rather. Next, what are those creditable input taxes? So there are some taxes. There are some expenses which are input tax that can be creditable or to be deducted to the output tax. Okay, so the creditable input taxes, these are the VAT registered person is entitled to credit the input taxes evidenced by the VAT invoices or official receipts issued in accordance with the Section 113 and 237 of the NIRC or the National Internal Revenue Code on the following to the output tax. Example, I am a VAT registered person. I have, let's say, I have a manufacturing business. I produce cake. Let's say cake. When I bought a raw material to my suppliers, and my suppliers is also a VAT registered business. So the VAT registered business, my suppliers issued me a receipt, which is a VAT registered. So on the part of the supplier, that is their output tax, output VAT rather. But on my part, as my cost for the production of my cake, the receipt of my supplier is a VAT registered, that is my creditable input tax to be deducted to my output VAT. Okay? That is the creditable input tax. So what are those following creditable input taxes that can be deducted to the output VAT or output tax? First is the purchase of the purchase or importation of goods for sale, for conversion into or intended to from part of a finished product for a sale including packaging materials, for the use as supplies in the course of the business, for the use as raw materials supplied in the sale of services. for the use in trade or business for which deduction for depreciation or amortization is allowed under the tax code. The purchase of real properties for which a VAT has actually been paid. Yes, that is creditable input tax if the VAT is already been paid by the customers, because take note that the VAT is indirect tax, okay? But it should be filed by the business, okay? Purchase of services in which a VAT has actually been paid. Transaction deemed sale under the section 106B of the tax code. Transitional input tax allowed under the section 4.111 or the Revenue Regulation 16-2005 and the presumptive input tax allowed under section 4.111B supra and transitional input tax credits allowed under the transitionary and other provisions. Okay, so what is the transitional presumptive input tax credit? Please take note that the transitional presumptive input tax credit is any person that becomes liable to value-added tax or who elects to be a VAT registered person. It shall allow to subject the filing of an inventory as prescribed by the rules and regulations of her beginning inventory of goods, materials, and supplies, which equivalent to 2% of the input tax of the value of such inventory or actual value-added tax paid on such goods, materials, and supplies, whichever is higher, or the input tax equivalent or the inventory, it shall be credited against the output tax. So what are those presumptive input tax credits? So the presumptive input tax credits, those are the person or a business engaged in the following of processing of products: the processing of sardines, mackerel, and milk, and in the manufacturing of refined sugar and cooking oil and packed noodle-based instant meals shall be allowed for the presumptive tax creditable against the output tax equivalent to the 4% of the gross value in money of their purchase of primary agricultural products which are used as inputs to its production. Okay? So those are the presumptive input tax credit to be deductible to the output tax. Okay, so what is the manner? So what is the manner of computation of the value-added tax? So this is the manner of computation. So if the output tax exceed the input tax, okay, so that will be the VAT payable. So the output tax, these are the sales that can be VAT, regardless if it's a VAT inclusive or exclusive, unless input tax creditable, okay? So that will be the VAT payable. So if the output tax exceed the total input VAT, so that will be a value-added tax payable. But if the input tax exceeds the output tax, the VAT payable is negative, so therefore that is a loss, and there will be no value-added tax to be paid, but it should be filed to the BIR as a loss. Okay? So how to compute for the value-added tax or payable? So first one, let's have the let's compute for the net VAT payable on the net on the VAT exclusive. Okay, so what is the formula for the VAT exclusive? Okay, so the total output tax due or total VATable sales receipts times 12% less the total allowable input tax or total VATable purchases times 12. So that will be the VAT payable. So let's have the example. Let's assume that the total VATable sales or the VAT exclusive is 100,000 plus the total purchases with the VAT receipts of 70,000. So that is the input VAT, the 70,000. So now let us compute for the VAT payable. So the 100,000 sales times 12% because this is a VAT exclusive. When you say VAT exclusive, the sales does not include the value-added tax yet. So the value-added tax is 12% of the sale, then less the input VAT, which is 70% times 12%, that is 8,400. So 12,000 minus 8,400. So this is the value-added tax payable of the business, which is 3,600. So how do we compute for the net VAT payable if the value added tax is inclusive to the sales and receipts. So we have the formula, the output tax due or the total batable sales divided by 1.12 times 12%. So 1.12, it means 100% in 112% rather, and less the total allowable input tax or total batable purchases, 1.12 times 12%, that will be the VAT payable. So let's have the example. The example, it is based also on the assumption of our example. So the total batable sales or VAT inclusive is 112,000, and the total purchase with the VAT receipts as input is 78,400. So let us compute for the value added tax. So for the output VAT, 112 divided by 1.12 times 12%, that is 12,000, minus the input VAT, the 78,400 divided by 1.12 times 12%, that will be 8,400. So it's just the same answer. So 12,000 minus 8,400, the VAT payable is 3,600. So this is how we compute for the VAT payable. And this is very easy, very simplified, okay, on computing the value added tax. Or you can also use the alternative computation. So 1.12, that's equivalent to 9.33. So 112 times 9.33, 12,000, and 78,000 divided by 9.33, that's 8,400. So still the VAT payable is 3,600. Okay. So this is how we compute for the VAT. As I've said, it is a simplified. So you are going to get the sales, and make sure that those sales are subject to 12% or 0%. Okay, based on our rules which we discussed earlier on when the transaction can become 12%, 0%, or tax exempted. It will be depending on the nature and the line of business and transactions. Okay, so how do we file? When do we file, and where do we file a value added tax returns or the value added tax, the VAT returns? Okay, so what are those documentary requirements or the requirements to file for the value added tax? First, in order to file for the value added tax, you have to issue a certificate of creditable VAT withhold source or the BIR form number 2307 if applicable. Yes, because we have to file for that, so we can so the creditable input VAT can be legitimate to deduct to your output tax. And then the summary of the alpha list of withholding agents of income payments subject to withholding tax at the source if it is applicable. So the alpha list of withholding agents of income payments, those are the list of the business which are subject to withholding tax if it is applicable. So if it is applicable, but you have to submit, but if it is not available, then the BIR will be the one to provide it, and they're going to assess and check it if the value added tax to be filed is correct. And then there is a duly approved tax debit memo if applicable, and duly approved tax credit certificate if it is applicable, and the authorization letter if the return is filed by an authorized representative. So what are the procedures? So the BIR can fill up the BIR form number 2550M for the monthly VAT declaration, or the 2550Q for the quarterly VAT declaration. Because if you are filing for the VAT, it can be monthly or quarterly. It will be depending on the business if they are going to file on a monthly base or they are going to file on the quarterly base. Okay, so they have to file on the triplicate copies, 2 copies for the BIR and 1 copy for the taxpayer. Okay, that's why it triplicate copies. If there is a payment, okay, they can file the monthly VAT declaration together with the required attachments and pay the VAT, okay, to the any authorized agent bank or under the jurisdiction of the Revenue District Office or the large taxpayers district office where the taxpayer filed the tax. Okay, but most of the time, when you file for the payment, you may go to the BIR first for the assessment if it is correct. And once they are certified, then you're going to the bank and then give this form in a payment, the triplicate copies. And then once the bank transact the payment, they will give you a personal copy, and the 2 copies that you paid in the bank will be forwarded to the BIR in the latter for examination. So it means before you paid the tax in the bank, in the authorized bank of the BIR, you have to go to the BIR Revenue District Office for the assessment of your filing. Okay? For as long as together with the other requirements. And if there's no payment to be paid, of course, you can still file the monthly VAT declaration or 2550M together with the required attachment with the RDO, LTDO, Large Taxpayers Assistance Division, collection agent, or duly authorized municipal or city treasurer if it is registered or required to be registered. So if there's no payment, you can still file the monthly VAT declaration. It means you have to file a no operation or a zero income. Okay? Because whether you're earning a profit or not, exempted or not exempted, we can still file in the BIR in order to notify them. Okay? So what are the deadline for the filing of monthly VAT returns? Okay, for the monthly VAT returns, the deadline of filing is not later than the 20th day of the following each month. That is a manual filing. Let's say today is November, right? November 18. So if you are filing for the 2550M for the month of November, the deadline of filing is on the 20th day of the following month. So if you're filing for the monthly VAT, okay, for the month of November 2021, you have to you should file it on the December 1st up to December 20. Okay? Because you cannot file for the 2550M because the month of November has not yet ended. Okay? Because we are still on the ongoing transactions. So if you are filing for the quarterly VAT returns, of filing 2550Q, the deadline of the payment is within 25 days of the following close of taxable quarter or for the manual filing. Example, this is the last quarter of the year of 2021, right? November. So the last part of the year, October, November, and December. So if you file for the last quarter of 2021, the deadline of filing for the 2550Q is January 25 of 2022. So this is how we file the VAT. Okay? File the value added tax. Okay. For the electronic filing system, you can visit the BIR website for the detailed and updated updated dates of deadlines of electronic filing. Please take note that the deadline for the manual filing, of course, when say manual, you are going to download the forms, you can fill up, you can go to the BIR to assess what you filed, what you fill up for filing. And once the BIR collection agent assess, you can go to the bank to pay it. Okay? So the remaining, you can file it on the triplicate copy. So if once you pay to the bank, the 2 copies will remain to the bank and they will give you your personal copy. And the bank will be the one to forward your payment and your form going back or to return to the BIR. Okay? And for the electronic filing system, or you can use the BIR website when you're filing. And filing of electronic filing is very sensitive. So we should be careful on the figures that we put. Okay, so that is our topic for today when it comes to the value added tax.